All right. Good afternoon, Checkmate crew. It is just afternoon here, Friday, July 22nd, 2022. Hope everyone's having a great day. Yesterday, I didn't get to go over everything I wanted to go over in high noon highlights. So today, we're just doing a Friday session. It'll be a quicker session today. Also, we had some changes to our positioning. So before the week is out, I just wanted to let you guys know what my thoughts were and some of the changes I made to our positions. Perhaps even our plan going forward. So let's just get right down to it. Okay. So yesterday, okay, I had to manage certain positions. Yesterday we had the Australian dollar make an outsized move. This right here, it busted above our 6903 level, and because of that, I had to follow our rules, and I did get out of the FXI EEM, and lo and behold, look at that. Look at that. I get out, and then it starts to dump, right? So, womp womp, right? That's trading, that's life. It happens. That and the EEM. The EEM, this one, I would have been able to get out at break even if I had gotten out today. Instead, I got out at like a little bit less than 10% loss. But again, this was like, so out of the 7% of my portfolio that was deployed, EEM and FXI was about half of that, about 3.5%, and 1/3 of it was EEM, 2/3 was FXI. So FXI, I just got out at break even. EEM, I got out at 10% loss. Oh well, it is what it is. It is what it is. But so that was the change that I put. Could this fall further? It could. Am I going to re-enter short? No. Once I get out, I'm out. You know, that's just part of risk management, you know. And again, I told you guys yesterday, when I get stopped out, it's about a 30% chance that it may be, you know, that in hindsight, it probably would have been better to stay. It's about 30% chance of that. But I'm not going to risk that 70% chance just to hold on to this. You know, you're going to have losses, and you will have moments where you have 5 to 7, even 10 trades in a row where you lose. Okay, the point is you got to lose smaller than you gain. Okay, so you know, it's really funny that that in the last couple of weeks, my best trade has been Baidu, the long Baidu, which I had the least amount of faith in. But that just tells you, you know, about markets. You know, it is a force of nature with lots of random events. Okay, thank goodness for those Baidus. I mean, those Baidus, they paid for my FEZ and my DIA puts. But yeah, you know, it ended up being a long trade that ended up giving us profits this week. Who would have thought, right? But you know, that's why you have to take opportunities, and that's why you have to size your you have to manage your position sizes so that you can take those opportunities, because you never know when those opportunities arise. So it's really all about risk management. On that trade, I was able to make about 100%. These I lose very little, right? Also the gold trade. Remember a couple of weeks ago when I got out of gold, those were all small, like 5 to 15% losses, whereas the gains are 100%. So that's how you put the math in your favor. You want to keep your losses real small. You want to let your runners run and gain more than you lose. Okay, so that's part of risk management. All right. So that is EEM. So I'm out of EEM FXI. I showed you guys that yesterday on the video, but I just wanted to make sure you guys knew that just in case. Okay, so I'm just repeating myself really. Let's go over the big news again. It's all about the dollar. This is here. Let's go to my other chart right here, the one that has all the squiggly lines. So this is the 18-day moving average. As you can see, we are below that. Okay. Now I did say it's all about risk management, following rules, right? Well, I don't know. Today I might break my rules. Not really sure. I do believe that the markets may hedge just from what I'm seeing right now, I mean, the VIX is down and the markets are also down too. So right now, again, this is one of those markets where we're not seeing that correlation between VIX and the S&P 500. So let me show you on the big chart. The VIX, okay, it's down like 9 cents or so. But the S&P 500 is also down, okay? So there must be a dash for cash, okay? Where's all that cash going? I think it is going to the dollar. I just think that the dollar is retreating because against a lot of, especially a lot of the emerging market currencies, it has lost some ground to that. So I do think that's probably where we're seeing that. I just want to take a look at the euro. I saw it this morning, but oh yeah. So the euro. Let me see. Is the euro? Did it lose less than what the dollar? Oh, so the euro is also going down as well too. So it's mostly from emerging market currencies. Then it looks like. So yeah. Then in that case, I might still keep it. I still might keep it, but I might cut it earlier. So what I'm really looking for is, remember from our growth, it's this chart by now. You know this chart. I've shown you guys this before, right? Growth over value, okay? So that's why right now I think a lot of the participation in the market is coming from growth stocks. And also, too, it just so happens to be that next week is all the mega tech ERs, right? How convenient the timing. But I do believe that we may have a little bit of a pullback as investors hedge a lot of their tech stocks. Just keep in mind, guys, that for the past 2 weeks, no, more than past 2 weeks, for the past few weeks, there's been large purchases, block orders of tech shares, okay? Yes, retail is selling, but institutions are buying. So when institutions are buying like this, I can see them hedging, all right? And so I am going to change my initial plan. I am going to, and also too, because of that Baidu win, the DIA, my DIA spread and FEZ put spreads are free. So I think I'm going to let those ride. Okay, so the DIE, FEZ, and then my UVXY call spreads, they're so small anyway. On its own, they're so small. So I might just keep them as a hedge for, my long-term portfolio. Okay, so I might keep those three. That kind of sucks. I mean, those are the ones that are not performing as well. This would have been performed well. In hindsight, I should have gotten rid of those and kept these. But we shall see next week. That's all hindsight, okay? It is what it is. Okay, we got to move on from that. But that is my new plan. Okay, I'll recap the plan at the very end of this episode too. Okay, so I'm going to keep my FEZ, my DIA, and my UVXY put spreads, and when and then I'm going to take my cue for when to get rid of those from the NASDAQ. And I even set myself an alert for 12,150 on the NASDAQ futures. That is where we saw hedging demand come through for the past few weeks. Institutions would buy here. They would have block shares here on the QQQ. If you look at the QQQ, look at Apple, look at Amazon. If you look at all these big tech names and tech names that have gone up a lot in the past few weeks, all the block orders happened here at the lows. And then there was hedging demand. So put demands and calls being sold. There's a lot of calls being sold here, and puts being bought. So caller trades, okay? And so that's where we saw this action coming in. Now we're above that. I think if it treats that area where the hedging demand came through, if we now treat that as a floor, I think the markets could go up a little bit more. So I am actually going to get out of my spreads around here when the NQ gets to 12,150. All right. I may I may even do a short-term swing long, like a 1 month or a 2 month spread, very small long. All right. And then the plan for buying puts is not going to be at 41.50 anymore, especially with the dollar coming down. I don't think 41.50 is appropriate anymore. I think what I'm going to do is now wait for us to pass this level. This is where we saw some institutional buying in the beginning of the year. We saw institutional buying here, and then we also saw puts getting slammed here as well, same level. Okay, and I think if we can pass that and get to around that 4,300 zone, that is where we may see hedging demand come back. You know, just like here, it kind of poked above. You know, and that again, this is just where there was just a lot of institutional buying in SPY shares. It poked above that, and then it got slammed down with hedgers and sellers. Okay, I think it's the same thing that's going to happen. We're going to go up here, and then hedgers and sellers are going to come back into the market. Well, at least that's the bet. Okay, I think it's going to happen more here. I do still think there's going to be one more round of volatility. I just think it's going to happen higher now. I don't think it's going to happen here at 41.50 or 4,100. I think it's going to go all the way up to 4,300. And just anecdotally, I mean that would be a move that wipes out bears. That would completely wipe out bears. And then you know what little money the bears have, they'll probably go long here, and that's when they get their the rug pulled right from underneath them. I can see that happening. And actually, I think that would give us a high quality put. I think that's a much more high quality area. And that way we know that if it just keeps going up for another, let's say for the rest of the week or for a week or so, you know, that means we're out. We can get out for a small loss. So it makes risk management easier too if we enter here instead. So I'm waiting for that 4,300 zone. 4,300 zone on the S&P 500, that's where I'm going to start buying put spreads. I am not going to buy put spreads at 41.50. And also too, when the NQ gets to that 12,150, I'm going to get out of our existing puts. I may even do a small swing long, and then again, when the S&P 500 gets to that zone right here where sellers came in last time, that's when I'm going to buy put spreads. So that's the plan. Okay, that is my revision to my plan. All right. When the market conditions change like this, you have to change your strategy and your outlook too. You can't just stay stagnant, especially in a market like this that changes so quickly. It looks like, you know, rather than the currency markets, and when I mean currency markets, I'm talking about Australian dollar. The dollar signals have been quite clean, but really though, it's really, you know, the cleanest signal of all though, really, has been our junk bonds AD line. I mean, the junk bonds AD line pretty much called this. You know, we saw the higher high. We saw it make a higher low here, right? I talked about this in the bond section of our Discord. It made a higher low, made a higher high, and that was the tell. And it was turning, and the market was turning, but the junk bonds AD line was also turning. And also, too, the number of advances kept increasing over time. All right? And that was a tell. Right now, we are 1, 2, 3, 4, 5 days straight of advances over declines. We remember before that, we had 4 days in a row back here last week, around the first week of July. We had that 4 days in a row. And I said, ooh, the junk bonds market is changing. That was our tell right there. So the cleanest indicator that we have right now is this, I think. It really is. I mean, this has just been spot on. Should have listened more to this. It is what it is. Now we know, though. Now we know. We use something until it stops working, right? This is still working. So we're going to keep using it. Okay, we're going to rely on this more heavily now. And so really in the next pullback, also when it goes to 12,150, you know, what I'm looking for is also another confirmation for us for that swing long at 12,150, at the NASDAQ, if this line makes a new lower low when that 12150 happens, then we can just get out. We can just get out of that swing long for very minimal loss. Okay. So again, this is going to be the tell. Again, the reason why we have to, the reason why it's going to be hard for us to wait for confirmation from this line is because this line only gets updated at the end of the day. So really, this helps us with confirming our positions, okay? Either confirming and can we lean on that trade or not. That's what this is going to tell us too, okay? Space telling me he got stopped out of his 397 puts as well. Gotta reply back. Welcome to the club, brother. This is not an easy market to trade. Just sending him a message there that we're talking about him. But anyway, but yeah, so again, this has been the tell right here. So if you ignored this, I didn't ignore this, but I just kind of put it in the back of my mind. Shouldn't have. This is the real tell right here, okay? Market conditions are changing. Okay, and it gave us that tell in the beginning of July. Shame on me if you're not seeing that. I mean, I did see that, and I did tell you guys this. I did, to be fair to myself, but I should have listened to this a little bit more. 4 days in a row like that, I should have known something was up. And also, too, the day before, I remember, guys, I even told myself all these stories, like, the advances are, small, too small to rely on. I even told myself a story. I said, before that, I said 4 days in a row. I didn't say 4 days in a row and had to be big. I just said 4 days in a row. And then because the numbers were small, I got freaked out. So it is what it is. I mean, but now we know, okay? It's just about, it's just black and white. Simply it is or it isn't. Sometimes we overthink things, okay? Sometimes we do overthink things. All right, so there's that. So, but I do believe that, maybe that with the big ERs coming up, we will see some hedging demand coming in. Although the VIX is not showing that, we may see hedging more in the form of people selling off some shares. That's been the theme for 2022. VIX and S&P 500 not so correlated because there's been a dash for cash rather than hedging. It used to be before that when there was no alternative, people would hold their shares and they would just buy puts to hedge. Now people are actually going to cash. So that's the reason why you're seeing some hedging demand decrease. So even though we've seen some of these big sell-offs, VIX hasn't really made that big of a move. Okay, VIX should have spiked higher historically with the moves that the S&P 500 has had this year, but that's not been the case. I do think, though, we're due for a big VIX spike, all right? Just because now there's more and more share accumulation from institutions. Now they're going to have to hedge. Generally, institutions don't sell right after they buy, okay? They'll hedge, okay? They'll hedge those shares. So as more and more shares are being bought by institutions, I think the hedging demand will come back. And there will be a spike, an outsized spike. I think way too many people right now are short the VIX. Lots of short VIX futures. Okay, VIX futures are heavily being shorted right now. Just kind of like beginning of 2018, January 2018. Everybody was short the VIX. Everybody and their mothers were short the VIX. And then what happens? We saw a little bit of a VIX spike, and then there was a rush to cover. People had to buy puts to hedge. People had to get long on the VIX futures contract. And then we saw that huge spike in January of 2018. Let me see if I can find that. Right here. This. It was when VIX was low. Right here, VIX was like in the 8s and 9s. Okay, people were shorting the VIX and shorting VIX futures. And then we saw a little bit of volatility with Jerome Powell being the new chairman. And then there was a little bit of volatility, and that just caused all that short covering. So people had to buy puts, they had to cover their VIX future shorts, and that just caused this like Volmageddon. Okay, it's all based on positioning. This Volmageddon was all really based on positioning that had to unwind. All right. I can see something like that happening soon. When is that going to happen? I have no idea. I thought maybe it'd be good to start here. No, and that's why I'm revising my plan. I'm going to buy those put spreads at 4,300 now. I think it's going to happen a lot higher. Okay, just because the dollar's dropping. And again, where am I getting all that sentiment from? Again, I showed you guys this. The S&P 500 priced in euros. If you take out that dollar noise, all right, already the S&P 500 broke out of its June highs. Now it's back testing it. I wouldn't be surprised if it goes up a little bit. Okay, so if the dollar drops and the euro advances, I can definitely see us getting to those highs and then making a little bit more. Just like the euro chart is doing. It's almost like the dollar denominated chart, which is like the quote unquote normal chart. All right, the normal chart is actually just following the euro charts, which is really funny. I can't believe that. It's something I didn't want to believe at first, but I think it's just happening more and more. The dollar denominated chart is kind of lagging behind the euro chart by about a few sessions, by about a week or so. So I think this is also a good indicator too. Speaking of lagging indicators, or speaking of following the euro, gold priced in euros. This right here was just a clean retest of this move. Just clean, super clean. And that just happens to be, that level just happens to be where this was too. Where this level was. All right. Right there. That's why I mentioned this level right here a couple weeks ago. It kind of matched up with the euro chart. And so, yeah, I do think that once this comes, I think when, this generally metals, again, gold generally makes this kind of, it revisits those lows. Once it makes a low, it revisits it within a few weeks. Okay, it can take maybe a month or two too. So gold generally doesn't act like stocks. It doesn't just like go crazy up and like V moves. It usually doesn't do that. I mean, it could. I'm not trying to predict the future here, but it's very unlikely that's going to be a V move. When it comes back and retests that lows, I'm going to go long 1680 or so. So that's part of the plan. Gold long. If it gets back to 1680, retest those lows. I'm going long 6 months. Call spreads on the actual gold futures itself, or I may use GLD. Actually, you know what? I'll use GLD. I know a lot of you guys don't use futures contracts and don't have futures enabled accounts. So for you guys to follow along, I'll do GLD for you guys. In the end, I'm doing this for you guys. So yeah, I'll do the GLD with you guys. And plus the skew is pretty good too. You get pretty good skew on it. You can definitely use GLD and use the math in your favor still. So I'm not against that. So yeah, when that time comes, I'll let you guys know, of course. All right. Speaking of commodities, one thing I wanted to go over yesterday, feeder cattle. Oh my goodness, look at this. It's one of the few commodities that are still at its highs. Feeder cattle, hogs as well too. Lean hogs. Okay. I've been listening to rumors, and when I say rumors, I'm not talking about like media or like people, random people on the internet or things like that. I actually know people who commercially trade agricultural futures, not to like speculate, but because of their commercial business. Okay, it is their business to manage risk on their crops and their meat products. So they use it to hedge and to lock in certain prices. So I know some people that do this for their commercial business as a hedger. and they're telling me that right now that they're having some issues because of this weather. Okay, they're having issues with cattle. Okay, cattle are not, from what I've been told by them, there's some cows that are just dropping dead because of the heat. They're dropping dead. Some of them are not getting fed enough. Some of the grain products and the hay products, the grass products that they feed them have gotten really expensive because fertilizer costs have gone up. We have actually somebody here at Checkmate Trading who is, who's kind of like boots on the ground. He's actually also in the farming business, and he even confirmed that certain meat prices are going up, and so it kind of confirmed, kind of some of the rumors that I had from my inner circle as well too. Usually, when stuff like this happens, it's not really the farms that benefit the most. Although some farms, especially if they're bigger, they may see the benefit. Really, though, it's the slaughterhouses. It's the wholesalers. It's the people who sell to the retailers. They really control the business, especially in meats. And really, there's like 4 big companies that control the meat market in the United States. Okay, it's Cargill, which is a huge private business. I think if they were publicly traded, they'd be number 15 on the Fortune 500. Huge company. You've never heard of the company before. Most people have never heard of the company, but it's one of the largest businesses in the world and very profitable. Usually it's like those very unsexy, boring businesses that are usually the most profitable. I mean, they usually are. Cargill, amazing company. It's privately owned though. Cargill, Tyson, JBS, and National Meats. Okay, those last 2, JBS and National, they're actually Brazilian companies. Okay, and so and there's been a lot of consolidation in the meat market. So these guys have gone out and really bought out all the competition. There used to be a lot more meat stocks. There really isn't anymore. I mean, I searched back I went back to I used to trade a lot of these agricultural products too, by the way. When I was a lot younger, I actually used to trade the meat futures like an idiot. I don't recommend you guys trading the meat futures. The meat futures are very thinly traded, and it's the high frequency boys have taken over. I mean, you're gonna get chopped out. I mean, these moves sometimes have no rhyme, no reason. Okay, it's just it's all just stop hunt algorithms and high frequency traders. They've really taken over this market. It's a little bit thinly traded. I don't recommend doing any futures trades on this, but I think what's worth a trade, it's one of the few meat stocks that are still available to trade. That's not a major. Tyson, of course, is the major, right? JBS, you can buy JBS and you can buy National Meats. National Meats is the American brand that they use. It's actually a Brazilian company. I forgot what their name. I think it's Mefrig or something like that. Those parent companies, they're traded on the U.S. markets, but it's over the counter. I don't trade pink sheets. That's just me. I don't do that. But you can if you wish. But the ones that are mainly traded, there's not a lot of them because again, a lot of them just got bought over the years. I looked through my old list, and man, some of these companies discontinued trading in 2016, 2018, all these. So there's been massive consolidation in the market, but Tyson is one of them. All right. Also, what I like more is Pilgrim. Pilgrim is a pure chicken play. Okay, they do mostly chicken. Okay. Why do I like chicken? Because here's the thing, okay? Back in 2014, we also saw a huge spike in beef prices. This is when I believe there was I think there was some type of, if I remember correctly, I believe this was due to some type of disease in cows. And so it drove up, it kind of shortened supply. It was around right here. So that caused chicken demand to go up because as beef prices go up on the shelves, people start looking for alternative proteins. When beef prices go up like this, generally sales in chicken and pork products start going up. All right. So with feeder cattle this way, and with the expectation that retailers are going to get hit with price increases from companies like Tyson, like Cargill and whatnot, I think that chicken demand will also go up too. Okay. Now here's the thing. This has been in a trading range for a while, and we have an earnings release coming up in Pilgrim's Pride. Okay. So if you are aggressive trader, okay, I would still wait for after earnings release, and maybe this might be like sell the news event. And if that's the case, I don't mind trying a nibble right here at the 18-day moving average at 29.37. I don't mind doing a little nibble there, okay? Again, after ER. If the ER comes out and it's not as good, boom, I might do that. I might even sell puts too. I may sell puts that are a little bit out the money and take assignment and be ready to take assignment, and then I can sell covered calls against it. This is something that I would hold maybe for, if I did get assigned, I'd hold for a couple quarters. It's not a long-term play or anything like that. I wouldn't hold it for years or anything like that. But it's just a play on beef prices, and then all the other proteins increasing in price as well. So, let's say it gets sold off after ERs. I mean, I can definitely sell some 1 month out puts, collect maybe, I don't know. We'll see. I mean, if it sells off, I mean, these could easily become like 60, 70 cents. So take 2% to take assignment at 3 or 4% lower. Okay, that doesn't sound so bad. And then I can sell covered calls against them once I get assigned. I might do that, or I might buy a call spread. It just really depends on the IV at the time. But I just want to, I just wanted you guys to have this on your radar as well too. Okay, chicken. Okay, if you're aggressive, you would start making moves on this on the daily chart when it gets to. Actually, was I looking at the weekly before? Yeah, I was. So that the 18 week. I'm sorry. So that's where you would want to. If you want to get aggressive, that's where I'd get aggressive. Is the 18 week. I'm sorry. I was looking at the. I thought I was looking at the daily chart. The 18 week. I want to get aggressive at the 18 week. The 18 week actually corresponds with the bottom 1 standard deviation Bollinger Band level. Oh, actually no. It corresponds with the 2 standard deviation Bollinger Band level right here. So that's a high quality long, in my opinion. It's right there. So you can either consider it the 2 standard deviation Bollinger Band on the daily chart, or you can use the weekly chart, which I prefer. I prefer the weekly chart myself, and it's right at the 18-week moving average. But it's right at that where the resistance becomes the floor. Okay, so once we visit that floor again, I'm gonna go long, and then I'll hold it for a quarter or so. So right now, I'm looking at maybe perhaps December or even January calls. December or January call spreads. The OI is really small on this. So that's why I'm not going to be making a big position in this, because look at the OI and volume, and it's very low. So even if I were to do this, I'd keep it extremely small. Extremely small. I'm just curious myself. What is that? 185? Okay. So yeah, I mean, we'll see. If it drops a little bit more, this can definitely become like a 3-to-1 reward to risk. What about the skew? Skew's not very good, though. I will say the skew is not very good. I might just buy calls outright. Just buy Delta 40 calls. Don't do a spread. We'll see. We'll see what happens after the ER. I think because of also the ER is coming up next week, I think it's also affecting the skew a little bit. Maybe the skew changes after the ER. We'll see. It's not uncommon for that to happen. We'll see. This company is also the reason why I like this company too, is because 80% of it is owned by one of the big four. I forgot which one of the big four that owns it. I think it's National. I think it's National Meats. National Meats owns 80% of this company. And back in 2021, they wanted to buy the rest of the 20% shares at $31 a share back in 2021. But then the deal fell through. The deal fell apart. Okay, and that's where this sell-off came in. The deal was announced that it was going to fail in February. Okay, they made the announcement here that National Meat said they're going to buy it at $31 a share, and then it went to it went to 28 or so. Then it went back down, and now we're here. So now we're at the point where National Meats wanted to buy the shares, the rest of the shares. So 80% of it is owned by, I believe it's National Meats. It's one of the big four that owns it. So there's definitely some quote unquote diamond hands that are holding this. Okay, it's institutional diamond hands, and I like that. I like to see a stock that's some institutional diamond hands in them. Okay, that's just me. I just kind of like that. I like that fact. Okay, so I am going to be looking for a play in that. I'm getting a question. What is this? VIX snapshot here. You can see that total VIX call open interest remains near March 20 high. Many are highlighting the surge in position for VIX calls, and most of that position is October-November expiration in the 70-85 strikes. Okay, that's fine. But what you don't know from this, from that Spot Gamma report, is that those VIX calls could be just a hedge for your VIX futures shorts. Okay, there's a lot of people shorting the VIX futures right now. Okay, so yeah, I get it. Sometimes they might buy VIX calls. Sometimes VIX calls or SPX puts are used to hedge those. Definitely possible. I wouldn't doubt it for a second. Do you really think? And usually VIX calls are like institutional. A lot of people use it. A lot of institutions use it. I don't like to use it. I don't know why institutions stick with the VIX calls. I think SPX puts are better. Personally, I just think they're better as a volatility hedge. But yeah. So that doesn't really tell me much. It just tells me that yes, there's a lot of interest in VIX calls, but that doesn't mean that people are bullish on the VIX. It could be that they're bearish and this is their hedge. So I actually think that's the case. I think most people are short the VIX futures, and there's definitely a lot of positioning on the short side. Also, too, if you look at S&P 500 options chain, people are definitely positioned short. Definitely positioned short. Yeah. Anyway, back to this PPC. Okay, so that's a play that I want to be looking at. Okay. So that's from the meat markets. Oil, commodities, and since we're on the commodity train, oil still doing what oil does best. Not doing anything I want it to do. That's what it does best. So, it rallies here a little bit, but that's just not enough juice. That's not enough juice. That's not enough reward for that risk that I'm taking. If I'm gonna put some risk on a commodity like oil, I want some juice. Okay. Please give me here. Please. If the dollar drops, they can. Oh, what a glorious short that would be. Natural gas. I mean, wow. Didn't I say we might have $10 before the end of the year? Did I say that? Yes, I did. I told you guys that here. When it dropped here, I was like, oh, it still's got a chance. And then people were laughing at me. And now I don't hear that laughter anymore. Okay? I don't hear that laughter anymore now. I think natural gas is going to go back up. I'm actually curious. What's that doing for Dow? It's not doing much. What is that doing for fertilizer companies? We shall see. When natural gas starts going up, fertilizer prices are going to go up. So those of you in the farming business, my heart goes out to you, because next year you're probably going to pay for this too. This year, apparently, from one of our members, fertilizer costs have like more than doubled. It was like double or triple, right? It was something like that on that scale, maybe even more. But man, I think that's going to continue. That's really tough for some people, especially the small farms. That's really tough. Corn, not coming back. Remember when people were bullish here? We called the top in corn here, okay? But people were getting bullish here, and I was like, temper yourselves, guys. It doesn't always work like that. Lo and behold, it doesn't even give us a retest. It didn't even retest. Usually it does. Didn't even give us a retest from this signal right here. Remember, this is where the data came out of the acreage. It was around June, mid-June. Remember that? And then it just never came back to that. Never came back. It is what it is. Joy of missing out. Did TSM hit my line? Let's take a look. No, it did not. I didn't get alerted. Oh my God. Hold on. It missed it by 17 cents. No. 27 cents. Jesus Christ. It missed it by 27 cents. My goodness. That's where I was going to get alerted. I was going to short, though, higher, 89.50. But I would have considered legging in at 88. No, you know what? I take that back. Let's be a little bit more selective in what we choose to short at this time. Now we're going to start getting really selective on everything. 89.50. I want 89.50. I want that red line touch. That 2 standard Bollinger Band, length 18. Remember, guys, the 2 standard deviation Bollinger Band is length 18. That's what the pros use. The factory settings are at length 20. You got to drop it down to 2. Okay, you got to drop it down by 2. Okay? Just remember that, guys. The pros use 18. They don't use 20 on the 2 standard deviation. On the 1 standard deviation, though, you do use 20. Okay? Why? I don't know. Don't ask me why. I just know it's the case. That's what they use. Okay? So that's what I'm waiting for. I think if it hits there, all the people that bought here, they're gonna start taking profits because I do know at the institutional desks they do use this as their take profit line. So once that hits there, boom, we're gonna slam those puts. 85.75 most likely is gonna have like 3-to-1 reward to risk ratio for October. The 85.75 put spreads. So I will be entering that. I guess that will be my revenge for FXI. I don't like to use the word revenge, but I do feel a little raw about this. Oh, now it's even more. Oh my goodness. Such is life. What's AUD doing? Well, that'd be crazy if this is a reversal signal and it just comes down, wouldn't it? Murphy's Law probably will. Now that I'm out of the trade, it probably will. Okay, so next, what else is the plan? I went over gold. Oh, Bitcoin. Let's go over Bitcoin, guys. Let's go over cryptos. I know a lot of you are trying to look into getting cryptos at the lows or trying to short it. Oh, guys, by the way, Ethereum's options market is now bigger than Bitcoin's options market. Isn't that crazy? 5.2 billion on Bitcoin. Ethereum, 5.3 billion. Look at that. Options market in Ethereum is now bigger. All right, so let's take a look at that bigger options market first. We're gonna look at Ethereum. Ooh, Deribit changed their color. It used to be blue. Now it's black. Oh. It used to be that navy blue. Interesting. Anyway, is this Ethereum? No, this is Bitcoin. Hold on. Let me go to ETH. All right. Let's take a look. 5.2 billion. 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 5. Smile forward skew for tomorrow's expiration. Very interesting. Backward skew everywhere else. Even smile for December. Okay. Call volumes exceeding put volumes. Calls. It's all about calls. Let's see. I want to take a look at volatility's going up. Okay. So there's definitely some buying happening in Ethereum calls. Yeah, there's a lot of buying in calls. So, okay, so then in that case, where are the calls that they're buying? They are buying, what's August, September, July. So now we're going back to short data. Yesterday, remember how we saw all those Decembers? And now we're actually starting to see some more closer dated hedging or closer dated options trades. I wonder if these are hedges. Because I noticed now also on some of the block trades, there's some sells that I just noticed right here. There's some sells. So that's like what? A sell on the 1700 calls? That's just out the money. That's like a at the money. That would be like trying to harvest intrinsic value. Oh, but it happened at the same time and the same amounts. No, it didn't. Did it? Yeah, it did. In the same amount as this one. 1800 calls were bought. This was sold. So this is probably a spread then. This is probably a spread. All right. If you buy the 18 and you sell the 17, that's a credit spread. So somebody sold this credit spread thinking that by August, Ethereum will not go above 1700. Well, no, not really. 17. So they made what on this? Oh, no. Wait a minute. Am I looking at this wrong? No, I'm not. No, so they're selling call spreads on this, and they made what 50 points on it. So they think it's not going to go above 1750 by August. Okay. We shall see. Okay. Not sure if that's. I think that's probably just a hedge, maybe to pay for an options position. But let's actually take a look at the chain itself. Let's take a look at the chain. September. Is that where it was? No, it was August. So we'll check September 1st because this is one of our big OI strikes. So yeah, this is one of our big OIs. Oops. Volume's not even showing right now. We don't need the size. I just need volume. Yeah. Okay. So right now the volume, we're seeing volume. I mean, that's still quite a good deal of volume. I don't need the position line. I don't need this position. Yes. Okay. So yeah, we're seeing a lot of volume. Even on the call side, especially on the call side, but also too on the put side too. So there must be some demand for hedging, or maybe perhaps they are selling those puts. But really, the positioning for December, bullish. I mean, remember guys, yesterday I went all crazy because we saw that a lot of the volume and OI was coming in at Delta 19, which is the same as the 4500 SPX. Where we're seeing a lot of volume there on call buying. So, definitely for the end of the year, there are some expectations for the markets to go up. And actually, Nunya, the post that you put, it's really funny. There's all this positioning for bullish action for the end of the year, but then also too you see this. So maybe people are thinking that in the road for us, on the road to higher prices, we may see one big hiccup, which I think is possible. That's what I'm planning on. That's why I told you guys I'm raising my level where I'm buying puts on U.S. indices by 4,300, because I do think we're gonna go up over like the next, let's say 6 to 9 months. But there's going to be one big volatility spike in between there. Now, when that happens, I don't know. And that volatility spike may have us visiting the lows again. Okay. Again, I think the next volatility spike will be big. The reason why I think it's going to be big is because everybody's short. Everybody's short on volatility. Okay. So that kind of that actually does make sense now, more that you think about it, because why would they position themselves for 70, 85 strikes, right? And they're starting to profit when VIX goes over 40. Probably because they also see that too. They're probably short the VIX, and they're like, you know what? Everybody's short the VIX. So if everybody runs out the door at the same time, this could really spike. So it does make kind of sense. I mean, if you're gonna hedge big like that for a big movement like that. Because if you're short the VIX right now, you've probably made so much profit already that if you see just a little humdrum spike in the VIX where it's really, really small, it's not really going to matter to your bottom line as much. But if it spikes big, then it could hurt your performance. So it does make sense that they're buying it as a hedge. I don't think people are actually like getting bearish. I think people are the institutions are getting bullish, but they're hedging. They're staying cautious. Okay. And it kind of makes sense here. I mean, I guess that's what we're seeing now with the block trades. We're actually seeing some calls being sold as a hedge, probably for those calls that they're being bought. That's kind of like a calendar spread, right? For those of you who trade options, a calendar spread on calls is when you sell closer dated calls and you take that premium and you buy some more further out the money calls later on. Okay, so what you're saying is that short-term volatility is going to go down, and the rally is not going to happen until later. Okay, that's what that calendar call spread means. Okay, so I see kind of like that forming in Ethereum market right now, some calendar call spreads, which kind of matches our sentiment too. Again, I think it. I think the market is just playing this out. And I think at some point we will see a volatility spike. I do think that we're going to see one more, but it's just a matter of when. And if you stay short until that happens, then you're going to get wiped out. So you still got to manage risk. Okay, even though we're going to see one more wave of volatility, no matter how sure we are, we have to manage risk. Okay, we have to manage risk. Always repeat that to yourself. We have to manage risk. Okay, always. All right, Bitcoin. Let's go to Bitcoin. Let's see what's going on in Bitcoin. Shit. Huh. There used to be a button here. I could switch over to Bitcoin. Why is it doing this? Oh, they put tabs on it like that now? Fine. They want to get all fancy now. Deribit trying to get all fancy. Why is it this page is still navy blue, but the rest of them turned black? That's not consistent. Bad front end? Yeah, man. I believe it. They need to color coordinate. Put some humanities majors on this. Make the colors match. All right, so let's take a look at block trades here on Bitcoin. Bitcoin way more subdued, more like little buying here and there. I'm not really seeing any compelling block trades. Let's see, nothing that really stands out. Buying 2023 40,000 calls. That's interesting. For March 2023. March 2023. That's interesting. March 2023. That's interesting. Skew. Their forward skew is for this weekend. And then we have reverse skew everywhere else as expected. Let's take a look at. I just want to take a look at that March expiration. What's going on that one? Are people actually like going at it right now for March? Not so much. It's just that one dude, or yeah. So somebody's. Are they paying a good price for this? They're paying a pretty penny for it. Okay, well. Oh no, that's not. Oh, I'm sorry. That's not the IV. I thought I was looking at the IV. That's not bad. Okay, that's not bad. That's not bad. I mean, compared to where it is, compared to what the IV is on the whole market, that's not bad. You're paying about average IV for that far dated. That's not bad. That's not bad. Let's take a look at the big expiration. This was the big expiration. Is this still the big expiration for Bitcoin? Oh, it's still. Look at that. Look at this. Is so. Look at that. I mean, it's December. No, that's volume. That's volume. Okay, no. Right here. Yeah, now we're getting there. Okay. So yeah. So okay, good. September, December. Yes, we want these to be big because that matches our thesis. I thought it sold off. I was like, what the hell's going on with that? No, this is what we're looking at, open interest. But there's still big open interest on July 29th. So let's take a look at July 29th and see what's going on. July 29th, this is a monster options expiration for Bitcoin. We could see some big moves. We saw big movements more so in Ethereum than Bitcoin for the past few weeks. I think that might reverse. That might reverse next week with Bitcoin making bigger moves than Ethereum. Wouldn't be surprised if that happened. Let's see. What is the volume? The quarterly testnet merge is August 2nd. Gorley testnet. And that's for Ethereum, right? Okay, so then the meeting will happen in September to tell us when the merge will actually take place. Okay, well then, okay, so I still think, I mean, even though the meeting is in September, I still think Ethereum with the monster September and December UpX, I think it's more so mirroring the S&P 500 rather than timing that announcement. I may be wrong, but I think it's more of a macro thing than it is just a crypto market thing. You see what I'm saying? I think it's more of a mirroring of the S&P 500 and risk assets in general. But we'll see. I mean, we will see. I mean, if the announcement, if there's some big movements because of that announcement, then maybe it's a combination of the two. It could be, very very well could be. But I think it's more macro based. But July, yeah. For Bitcoin though, July could be that next week could be a big expiration. Could be some big movements. We see calls, big call volume at 25,000. Okay, 25,000 calls. 25,000 calls right here. Big, a lot of volume. That's the highest volume today. Did we see any blocks on 25 for July? It does not appear so. At least I don't see big block purchases. Let's see non-block purchases. No. So makes me think. Okay, it makes me think that this is speculation, retail speculation. 25,000 calls. Generally, when we see call chasing by retail and these options go up in price and they take profit, that's when we can see, like, you know, those calls getting sold. and then prices coming down. So maybe that's what we see next week. If we see a run up into maybe the FOMC and it gets past, or maybe it gets to 25,000, 25,500, 26,000, then we could see some call selling and potentially see prices just receding back from all those call selling order flow. Remember, when the order flow is call selling, the market maker has to buy those calls. Buying calls is a bullish position, so they must short the underlying to stay neutral. Okay, so we might see that. We may even see pinning, gamma pinning happening next week at 25,000. There's a setup for it. There's definitely a setup for some gamma pinning at 25,000 if we get there. If we get there and it can just pin at 25,000, it'll like ping pong between 26 and 24 and then use 25,000 as a pivot, as a gamma pin. We could see that happening next week. And if it does happen, hopefully then I can show you guys like in real time like what's going on, and we can maybe monitor it together next week during high noon highlights. That would be nice. That was the plan last week when I gave you guys the gamma pinning video. I was trying to use Bitcoin as an example, but then all that order flow came in. Remember, it was gamma pinning, I think around 22,000, and then those 23,000 calls just rushed in like an hour before the damn call, and then it just broke out of the pin. The pin breaks when new order flow pushes that equilibrium. That pinning stays that way as long as the order flow volume stays below the hedging volume. Okay, but once that order flow volume exceeds the hedging volume, then prices move. Okay, that gamma pin holds no more. Okay, so anyway, we'll go over that if we see that again next week. I'm looking out for that pin. If it pins at 25,000, and hopefully we can just kind of monitor that together. I'm not trying to predict the future. I'm not saying that Bitcoin's going to go to 25,000. I'm just saying, though, if it does, the setup is there because of the OI and with the open interest. Definitely there's a setup for a gamma pin at 25,000 for next week. Okay? The setup is there. I'm just anticipating 5 or 6 moves ahead. That's all. All right? Fertilizer is effing ridiculous. Supposedly, rumor is when Europe sucks up all the nat gas, gonna go higher. Simple hairstyle. Yeah, that's true because you need that natural gas. Natural gas is one of the components in making those fertilizers. So yes, whenever nat gas prices do go up, fertilizer prices do go up. And I think that's why Mosaic did so well in their earnings in the last few quarters, is because a lot of their European competitors weren't producing as much because nat gas was so expensive in Europe. So Mosaic is one of the largest fertilizer companies in the U.S. And actually in the U.S., I don't know if they have any comparable competitor. But I do know that they have some competitors in Europe. And in Europe, those chemical companies and fertilizer companies didn't produce very much because of the high nat gas prices over there. So, I agree. If nat gas goes up, fertilizer prices are just going to keep going up. And that sets us up for perhaps a grain long trade next year. Okay, I'm not getting long on grains this year. Okay, only shorts for me until harvest. Okay, after harvest, then I don't know. All bets are off. But before harvest, yes. If it rallies before harvest, I will short. And then next year, we'll see. Once we see a little bit of consolidation in the market, price consolidation, perhaps what we can do is look for a long entry on grains again. Okay, maybe corn. Maybe we can get long on corn for that. All right. Any questions? Any comments? Any rude remarks? Anything you guys want to look over again? Let's go through the positions one more time, just in case. Okay. Again, I am out of FXI. I am out of EEM. Okay. It is what it is. I got You want to look at German bonds? Okay, sure. We'll look at German bonds, and then I'll do the final recap of the positions. Sure, let's do that. German bonds. Oops, I thought I had it here. Oh, U.S. dollars advancing. Perfect timing in getting out of my EEM shorts. Jesus fucking Christ, I swear. This market just, it's luckily that's why I kept all my positions small for the last 2 months. The reason why I kept them small was because I knew something like this was gonna happen. You know, it's gonna happen when trends change like that. When there's trend changes, a lot of this happens when inflection points happen. And now because there's no Tina, there is an alternative. There's going to be, you know, choppy. It's not going to be a V recovery. The recovery is going to take months in prices. But anyway, I've already went over that. German bonds. Oh, wow. What a reversal. Remember when these were all red this morning? MSC, I'm sure you're asking me that because of this, right? All of this was red. It was deep red. And so deep red in yields means there's buying. So now they're buying short term and selling a little bit mid and long term. Ooh. Maybe their yields might invert. Just like ours inverted. Huh. Okay. That's very interesting. That's crazy action for one day. I remember in the morning, these were all deep red. All the yields were deep red. But now the 2 and 7 are getting some bids. That means short term, people are thinking growth is going to slow down for the next 2 years in Germany. Is that what the bond market is trying to tell us? I think that's what the bond market is trying to tell us. See you, Nunya. Okay. I think that's what the bond market is trying to tell us. The bond market is trying to tell us that maybe the growth expectation for the next 1 year or two is going to be low in Germany. So what does that mean? Yeah, they're having some issues with energy. You know what, man? The more I look at this, I think I'm going to keep my FEZ. I'm going to keep my DIA. I'm going to keep my UVXY. God damn it. I cannot believe I got out of FXI. God. What is the worst? What's like the, you know, like, let me tell you, like, what's the worst thing you could have done yesterday? And that's what I did. Ain't that some shit? Yeah, risk management is always like that. Exactly. All the pros know that risk management is like that. But still, it makes you feel raw. A little bit raw. It makes me feel a little... It could have went the other way. You're exactly right. You could have went exactly the other way. And the thing is, like, AUD-USD just gave me that false fucking signal there. This bust out. See, remember this? It was like teetering. It dropped. And it tried to take it, and it didn't take it. And I was like, ooh, look at that wick. It's going to go down, and then it busts up. I thought this was like a failed, like this is a breakdown, and I thought this was a failed breakdown. A failed breakdown right here. That's what I thought. And usually failed breakdowns usually have huge moves. Like, you know, false moves come fast moves, all right? So I thought this was going to be a fast move up, and it was. Last night, this thing went up like crazy. And at first, the Chinese stock market, especially in their morning session, it rallied. And then it lost steam in the middle of the day. So, yeah, I know. It is what it is. I'm not going to look at this anymore. It's just going to disappoint me. But I am definitely looking at this, though, TSM. So, that bond information, thank you for pointing out that German bond thing. Actually, that gives me a little bit more conviction to keep my FEZ puts. And again, my FEZ and my DIA are paid for. That's why I'm comfortable keeping them open, even though the dollar's under the 18-day moving average. So, okay, let's go through the plan one more time. Let's go through my open positions and what I closed. Yesterday, I closed FXI. I closed EEM. Risk management, it's a bitch, but we got to do it. So that's that. What am I still in? I'm still in FEZ. Okay, I'm still in it. Just so you guys know, here, EM, I'm gone. You don't see those little tags anymore, right? It means I'm out of the position, okay? I'm out of the position. FXI, I'm out of the position, okay? So we're still in FEZ, all right? Still in these 32, 27, all right? Depending on how... No, I'm not going to add to this. No, I was going to say depending on how the dollar ends, I might add to it. No, I'll just keep them free like this. Right now, I'm using house money. I'll just keep it to house money. Dow Jones Industrial Average, I'm still in the Octobers, the 300 and 290. All right, I'm still in those. And the plan right now, and then the UVXY as well. UVXY, I'm also in the Decembers. 1424 and 1520 as always, okay? And then the plan going forward is on, actually, let's use SPX. So on the S&P 500, okay, initially I told you guys that I'm going to buy puts when I get to 4150. I am not buying puts there, okay? I am not going to buy puts there. I'm actually going to start buying puts because of the dollar's weakness. If the dollar continues to be this weak, all right? And when I mean weak, I mean under its 18-day moving average, which it is. Right now it's below its 18-day moving average. So if it still keeps going beneath its 18-day moving average, I am going to start buying put spreads at around 4,300. 4,300. I'm going to wait till 4,300 and buy 3 to 6 month put spreads there. Okay. So that is my plan. Also too, for the buying of SPY, I am going to start buying. I'm going to start buying shares at 360 when we get back to our lows of our June lows at 360, 361. I will buy even more shares. My biggest orders will come at 342. And again, 1 year in the money calls under 340. Okay, that's what I'm going to do. What else? I will be taking cues from the NASDAQ, as the NASDAQ is part of the leadership in this market movement, as evident by the IVW IVE chart, which has been spot on. If we get to this level right here, 12,150, okay, 12,150, that is where I'm going to take profits and exit DIA and my UVXY spreads. I may keep the FEZ one open, but the DIA and the Dow Jones and the UVXY spreads, I will get out of it at 12,150. I may even swing long, all right? Take profits when we get past above the June highs, and then again, wait for 4,300 to short the US indices with put debit vertical spreads. Okay, so that's my complete US indices plan. All right, that's my plan. Also, I've added a TSM to our plan as well. I already told you guys about this earlier in the week. If it hits that 2 standard deviation Bollinger Band at 89.50, it's right now it's around 89.50. I'm going to be buying those. I'm going to try to buy those 85.75 October spreads. Hopefully they will be around $2.50, giving us a 3-to-1 reward to risk ratio. That's my plan for TSM. PPC, Pilgrim's Pride. I am going to be monitoring this on the daily chart. I will consider going long at around 29.5, which is where this bottom 2 standard deviation Bollinger Band is. If you use the weekly charts, that level also coincides with the 18-week moving average, okay? Basically, it's where the ceiling was, and we're saying the ceiling is now acting like a floor. We have an ER coming up next week. Maybe we see a little bit of volatility and it touched that line. If it does, boom, I'm going long. Again, this is my play on meat prices going up on the shelves. So that is that move. Also, I'm going to start nibbling on HUT shares. I actually, in my long-term account, I left some HUT shares in there that I bought earlier. I've been selling calls on it, just aggressively just selling calls on it. I've been just getting my cost basis down. I may actually transfer those shares over to this account so you guys can follow along with that. I don't have a lot of shares. I just have like maybe a couple thousand shares. My initial goal was to get about 10 to 20,000 shares of this. I stopped doing that once I saw that Bitcoin was breaking down, and all I did was just start aggressively selling covered calls on this. So my cost base is a little bit higher. It's around I think it's around like in the 4s after all the covered call selling I did. But I'm willing to add another, let's say 8 to 18,000 shares. When it gets to closer to about, let's say $1.50. Okay, if it gets to about $1.50, I'm going to start legging into some more shares. So I'm going to transfer over my HUT shares from my long-term account into this spec account so that you guys can follow along. Most likely after the weekend, it should be there. I think it takes 1 or 2 days for them to transfer shares over. It's not like cash. Or maybe it's instant. I'm not really sure. I got to ask them. But I was going to do that later today. So I'll do that today, and hopefully you guys will see those shares pop up on my screen, and then I can show you guys what options I'm selling on HUT as well. But I'm going to be building a position on HUT. That will be my Bitcoin play. I'll buy a few physical Bitcoins when Bitcoin also gets to our buy level. Our buy level still hasn't changed. It's the Bitcoin to gold ratio that we've been using. Might as well take a look at that. Yeah, Bitcoin to gold ratio. And again, I'm waiting for this line to get hit to actually buy Bitcoin. I may also buy some Ethereum as well too when that time comes. So cryptos in general, Bitcoin and Ethereum, I'll buy it at that line. But with HUT, I will also buy if it gets to that red line too, to also buy. But also too, because this is also a small cap stock, and small cap stocks are, I think, going to be really strong in the next bull move. I'm willing to start nibbling at around the whenever it gets to the 18-day moving average. Right now it's at 162. I'm sure if it falls a little bit though, that will probably curl down and get to the 150s. So around there. And actually, it seems as if this stock likes to respect the Bollinger Bands a lot. Yeah, it does. It does like to respect Bollinger Band. So maybe if it chops around here for a bit, maybe the Bollinger Band might curl up and get to like the 130s, 140s. Then I'll start going there. But basically, I'm waiting for lower prices. Anywhere from like 130 to 150, I think is a great buy in this stock. So if it revisits those lows, I'm going to be buying some HUT shares, and I'm going to be aggressively selling covered calls on this. The IV is great on this, so it's a pretty good stock to wheel if you're long on crypto. Okay, and again, even for me, like 10,000, 20,000 shares, it's still not that big. Overall in my portfolio, it's really not that big. If I get up to 20,000 shares, it's still way less than 10% of my portfolio. I think it's like maybe it'll become like 5-6% of my portfolio at that point if that happens. So don't try to match me in my share count. Just do what's appropriate. Try to this is speculative, so keep that in mind. You don't want to be getting too heavy into something that's speculative like this. But I do think small caps are going to outperform in the next bull run. Small caps are just very strong. I think some of the zombie companies got wiped out in this June rebalance. I think a lot of them got pushed out, and some strong companies came in. Okay, so that's my outlook. Speaking of gold. Gold also too. My plan for gold is if it rallies here, it might fall down, and if it visits those lows again within the next 3 to 6 weeks, I'll buy right here. I'll be using call debit spreads on GLD to do that. Okay, so that's my complete plan, my outlook, my trade plan, and my current positions. Okay, So that's what I'm expecting. Let's just take a look at the dollar for one last look. All right. One last look at the dollar. Yep, still under. Okay. So again, I'm not selling out of my FEZ, DIA, or UVXY just because it closes under today. Okay. I'm going to wait for the NASDAQ to hit this line right here, to hit this area where hedgers used to come in. So once it uses that as a floor, I will get out then. Okay, I'll probably have a slight profit, and then I will swing long, and then again, I'm going to short when we get to 4,300. Okay, 4,300. Now, just a little caveat. If this line breaks, if this line just breaks, then yes, I'm going to just keep the risk off spreads that I have. If this just breaks like, just cuts it like butter and just keeps going down, then yes, then I'll try to take profits near the lows. And then I will not be shorting again at that 4,300 zone. I'll just probably be going long term then at that point. If it makes that final washout here. I doubt it though. I really doubt that. I really think it's going to come here and turn up, and the real sellers are not going to come into play until 4,300. Okay? So again, that's my plan. All right? That's the plan. All right? The plan is I'm going to hold all my spreads until it gets to here, 12,150. That's when I'll get rid of them. Do a small, very, very extremely small swing for the upside, okay? And then at S&P 500, 4,300, that's when I'm gonna buy the 3 to 6 month put spreads, okay? That's my plan on the indices. Boom, there you go, checkmate trading. That's all she wrote. Any questions, comments, rude remarks? This is your time. Let's see if there's any rude remarks here. I'm expecting some rude remarks because of that China trade that I did. I guess people are being benevolent today. Okay. All right, guys. In that case, this then concludes our session of Checkmate Trading High Noon Highlights. I will be back at the end of the day to either manage risk or either I'll be back to manage risk or to just confirm the data that we have. If you're joining us on Twitch or YouTube, be sure to check out our Discord. We have conversations like this on a daily basis. And we get a lot deeper into our trades and our thesis. Join the conversation. And as always, I'll keep our Twitch stream up so that you can see the charts and data that I'm streaming throughout the day.